Rich, please turn your mic off. Our next speaker is Ginger Bak on the probably difficult subject of trust accounts. This is I think a more of a finite topic than the rest of what we're going to hear today, and it's an awful lot of material to cover in just 30 minutes, but it's really critical. We wrote this book in conjunction with one of our members, John Mueller, who was the author. Another one of our members edited it heavily. It was quite a work. And I can tell you that in the attorney discipline arena, more than 40% of attorneys disciplined in Ohio have a trust account problem. And I'm not talking about thefts. I'm talking about screwed up accounting. Over 40% of the reported discipline cases include some kind of a trust account problem. So it's really a serious topic. And Ginger, who worked with me some years ago, she's very capable. She's going to scare the heck out of you, I think.
Oh, okay. So I just hit this button to,
Yeah.
okay. All right. I will start out by telling you a little bit about myself. My name is Ginger Bak, and my email and website are listed up there for you. I started out my law practice working for an appellate court judge, First District Court of Appeals for Judge Painter. When I left there, I worked at a large firm and was not happy. I didn't like the hours. I worked with wonderful people and I learned a lot about the law, but I was not enjoying my time there very much. They restructured. I was one of the people who was let go, and so I took that as an opportunity to do what I wanted to do, which was be on my own and have that autonomy. And so I decided to start my own practice. I made a ton of mistakes at first. I tried to jump into it a little bit too quickly, so that's my first bit of advice. If you're starting out, don't jump into it too quickly. But when I started out, I did general litigation. After about 3 or 4 months, I finally accepted the fact that I hate trial work. I despise it with every fiber of my being, so I decided to stop doing it. I now do appellate work. My practice is appellate advocacy. My clients are mostly attorneys who hate doing appellate work. So they're wonderful trial attorneys, med mal attorneys, personal injury, contract attorneys, domestic relations, all sorts of different practice areas, trial attorneys who don't like to do appellate work. So I refer people who call me to them. They give me their appellate work. So that is basically my practice. And I'm a million times happier now than I was before. That being said, there are a lot of pitfalls, and I'm going to talk about some of them. Okay, the first part of my presentation is talking about accounting and bookkeeping, and I'm going to be 100% honest here. This is so not my area of expertise. Everything I learned about accounting and bookkeeping, I learned from a book before I started my practice, and I have entrusted most of that to somebody else at this point. So if I have something on here that doesn't make sense to you, I will do my best to explain it, but really my best advice to you, if you're starting out, if you have been around for a while and you need accounting help, talk to an accountant. We're attorneys, most of us are not accountants. Talk to an accountant to help you out with your accounting needs. Okay, so bookkeeping. Basically, the definition of bookkeeping is recording your financial transactions. If you want to know how your business is doing, obviously you need to take control of that and know what you're spending money on, know what you're going to be spending money on, what you're going to have every month, that sort of thing. So there's 2 basic systems. The cash system is you record the revenue the day that it comes in. You record your expense the day that it goes out. So, and I have examples on the next page. We'll get to that. And then accrual is you record the revenue when the money becomes due. So the day that you send out your invoice, that's when you record that. And then your expenses, you record it on the day that you owe somebody money. So if you buy, I don't know, you buy something and you get invoiced for it, it's the day that you get the invoice, that's when you record it. So I have a couple of examples here. Oh, well, before I go there, just real quick, the pros to the cash system, it's simpler, it's easier to understand, it's intuitive. If you know how to, I mean, it's much, much simpler. The con is that it can distort the picture of how your business is doing. For example, if a bunch of your clients write you checks and you get them in September, you don't necessarily see how slow you've been in September because come October you might not have anything coming in. So it kind of distorts the picture of how your business is doing at any one time. The accrual method, the pro, is that it's more accurate, but then it takes a little bit more time and more steps so that you can see what your cash in hand is. I'm told that most new businesses, small businesses, do start with the cash method and then may end up going to the accrual method later. So a couple of examples here of the two. So Gus provides legal services to Sean. He sends him an invoice on October 4th. Sean pays in full on November 3rd. So Gus records the $2,000 on November 3rd under the cash method. Under the accrual method, he would record it on October 4th. And then example 2, Saul purchases $500 in supplies from Los Pollos Hermanos on June 15th. They invoice Saul. He pays on July 31st. Under the cash method, he records it on July 31st, accrual on June 15th. So that's just the difference between the two very broad methods of bookkeeping. So now we're going to move into the single entry method versus the double entry method. And I'm not going to go into great detail about either of these. If you look on your handout, actually the handouts are a little bit distorted because of the way that they were printed out. But single entry method is basically like you would balance a checkbook. You buy paper. You write it down as an expense, and you write down where the expense is, whether it's office supplies or salary or that sort of thing. So as you can see up here, you just do it like you would a checkbook on one line, each expense. I'm told again, most small businesses start with a single entry method because it is a lot simpler. It's also easier to make mistakes because you don't have the other balance on the other side, which you would have in the double entry method. With the double entry method, the concept behind it is each transaction has two effects. It has one part goes up, one part goes down. For example, like I have on here, if Sheldon is buying cheesecake from Penny, his account, he increases his assets, his cheesecake, but his cash goes down. And Penny, on the other hand, her increased asset is her cash, but she decreases her asset of her supply of cheesecake. This system is a lot more confusing than the single entry system. It's also a lot more accurate. If you decide that you want to use this system and you don't already understand it, I highly suggest that you contact an accountant to help you with this. This is one of those areas where I cannot really answer many questions about. There are accounting softwares, however, that make it easier to use this system. So if you invest in accounting software, it can help you use this system. Okay, the next page here, this is a chart of accounts. And a chart of accounts, basically all that is it's a way to organize your financials into different categories so that you know if something's coming in, you know, or going out, you know if it's for an office supply or for rent, whether it's a one-time charge or an ongoing charge. So there are ways to organize it that are more complicated. I think this is a more complicated way for a law office, for a small law office. Or you can have it into much simpler categories, such as you know, your income can be fees and interest, and your expenses can be rent, office supplies, phone and internet. So you can make it much simpler than this. this is something that I would suggest that you do research about before you set up your system so that you don't make it so complex that you don't understand it. On the other hand, you don't make it so simple that it's not accurately keeping track of what's going on in your business. So that's your chart of accounts. Okay, and the next page here is an income statement, and this is basically your income and expenses for a particular time period, say a month or a year, and it's just a snapshot of how you did in that particular time. It's not a forecast. It doesn't show you what's going on in the future. It's just simply basically, again, like balancing a checkbook. So that's what an income statement is. There are a whole lot of other accounting statements. Again, contact an accountant to help you with those. Okay, now I'm going to move on to trust accounts, which I am much more comfortable talking about, and which is a subject that is confusing, and it's extremely important so that you stay out of trouble. As Terry mentioned before, mismanaging client funds, that is a top reason for attorney discipline. Even if you're not stealing, even if you're not doing it on purpose, even if you're just negligent, it's easy to screw up and very important that you don't. As attorneys, you're going to have fiduciary duties to your clients, which we'll get to in a second. You cannot discharge your duties. Even if somebody else in your office or a partner or your spouse or a bookkeeper or whoever else mismanages your funds or steals money from your client funds or whatever, you're still responsible. So you have to make sure that you are very carefully keeping an eye on what's going on with your client trust accounts. And regardless of who's doing it, regardless of how much you trust that person, people can make mistakes, and you have to be that second set of eyes or the first set of eyes or whatever, just to make sure that everything is being handled properly. Okay, so your duties regarding trust accounts. You have a duty to account. You need to track your trust accounts for every single client. I would suggest you do it every single week. Especially if you have a bigger practice and you have a lot of clients who are paying you retainers or who have settlement funds coming in or have any reason why you're having their money in a trust account, you need to make sure that you track it very carefully and look at it, I would suggest once a week. Duty to keep the client informed. If you're moving, and I'll talk more about this later, if you're moving money out of the account, you should let the client know, and you should also always ensure that the client knows the balance in their trust account. Duty to safeguard. Client money always goes into a client trust account. Your money goes into an operating account. The client's money goes into a client trust account. We'll get into the different types of accounts, but just remember, client's money always in the separate client account because that is their money until you earn it, and it's indisputably earned, or until you incur an expense on their behalf. Duty of honesty and good faith. No matter how tempting it is, no matter how broke you are, never, ever, ever, ever use the money that's in the client trust account for your own reasons, or to pay for a bill, or to pay for new checks even, or anything else. Remember, that is the client's money. It is not your money until after you've earned it. If you make a mistake, if you do something, for example, a while back, actually that wasn't, I'll get to that one in a second. If you make a mistake, no matter how big or small, if you can't fix it immediately, ask for help. Give somebody that you trust, another attorney, a call the Bar Association, ask for help, and be sure that you keep the client informed if it's a specific client. Just don't dig yourself into a hole that you can't get out of. Ask for help. If the bank makes an error, talk to the bank immediately to get it fixed. Don't wait around, talk to the bank. A while back, I had a situation where I had written a check from my operating account and the bank took it out of my client trust account instead. The second I found it, which was about 2 days after it happened, I went into the bank immediately, had them fix it so that it ended up not being a problem because they fixed it immediately and it was taken care of. If I had not taken care of that immediately, it's possible that I could have written a big check out of that account and it would have bounced, and the bank has an obligation to report you to the disciplinary council if you don't have enough in your account, if you have not sufficient funds. So be sure that you check to make sure if the bank makes mistakes, because they do, they're human too. The people who work there are human as well. So just make sure that you always check those accounts. Okay, attorney checking accounts. If you decide that you want to open your own firm, you need to open at least 2 accounts. You need to open your own operating account, and then you need to open a separate client trust account. And a tip here, for the checking account, for the client trust account, use a different color cover on the checkbook. Make it red, make it whatever. Just make sure it's a different color so that it stands out, so that you don't accidentally pick it up and write a check on your client trust account for something else. So that's just a little tip. And also, if you have a bank card that goes with the client trust account, make it do deposits only. Set it up so that you cannot withdraw money with that card. And that way you won't accidentally use it to pay for parking or to pay for something else. So set it up so it's deposit only. Like I said before, client money goes into your trust account, attorney money goes into your operating account. Your trust account must be an interest-bearing account. I'll get to what happens to the interest in a minute. Work with your bank to get the fees waived. Because again, if you have fees and you're not paying attention and your account gets overdrawn, the bank still has the responsibility to report you. So make sure that you get the fees waived. You can always pay yourself out of your operating account to cover those fees, but honestly, in my opinion, if a bank isn't willing to waive those fees, go to another bank. And the Supreme Court has a list of banks that they approve for trust accounts. So, go to that list, go to the bank, figure out which bank is going to have the best deal for you. If you keep your operating account there too, that's more convenient for you. But again, just, the bank will waive it if you convince them to do so. All right, the 2 types of trust accounts. Separate trust accounts. It's separate client trust accounts. Basically, if a client's account is big enough that it can earn interest for the client above and beyond the cost of establishing and administrating an account, a bank account, then it should be separate. I don't think this happens very often. Terry, can you speak to that? It's not very often that you need the separate accounts. Yeah, basically what you need to look at is the amount of the funds that are deposited in that, how long it's going to be in the account, what the interest rate is. If in doubt, then you're going to put the money into a pooled account. And that's called an IOLTA Interest on Lawyer Trust Accounts. So generally, you're just going to have your operating account and your IOLTA account.
It's really a matter of judgment for the individual attorney and the individual situation, because the statute just says nominal sums held for a short time. So to some people, nominal sum might be $1,000. To others, it might be $100. What's a short time? They don't tell us. And the statute does say that that decision by the lawyer is not going to be the subject of misconduct. So it's really very much a judgment decision of do you owe your client in a particular situation a duty to open a separate account for whatever minimal interest might be. Of course, it's terrible, but for whatever interest might be available. And if you're holding $1 million in escrow and you're not sure when the deal's going to close, you need to put that in open a separate account.
Right.
And I guess another
Okay. Yes?
I'm not sure if this was something you're going to touch on later in your presentation, and if you are, I apologize for stealing your thunder. But
No
there's
thunder steal.
one additional operating account I suggest you all have, and that is a tax savings account, which is to say that if you are making a surplus of income in a particular month, you want to have a set aside on that for the estimated tax payments that you're going to need to make. If it's in your operating account, it is way too tempting to dip into that money and then put it back. You have that separate account, and you end up not needing it all. It's a nice bonus for yourself at the end of the year, but it'll guarantee keep you out of trouble with the feds. I recommend 35% as a good safe harbor, so that's it.
I think that's an excellent point. No, I didn't have it in my presentation, but yes, that's very important to do, because it is way too easy to, if it's in your operating account, just to spend it.
Would that also be a fee, would the bank charge a fee for that account, or do you get that?
Depends on the bank. I mean, it's typically just a simple either savings or checking account. That's just a supplemental operating account that you have to your checking account, where the money's just there as, until you have to write your estimated payment check.
I would suggest with that a savings account rather than a checking account, because, I mean, you might as well earn interest if it's just sitting there. So, any other questions? Okay, a little bit more about IOLTA accounts. You have to, if you are starting a practice, you have to register your IOLTA account with the Supreme Court. And you do that because they take the interest. And they also make sure that you're doing everything properly. So you have to register your IOLTA account with the Supreme Court when you open your firm, and also every reporting period. You have to re-register your account. And then what happens is the interest from the separate client accounts goes to the client. If you have a pooled account, an IOLTA account, that interest is taken, it's automatically transferred from the bank to aid in Ohio's legal aid fund. So you don't have to worry about what happens with that interest, because it automatically, or at least it should, your bank should do that, automatically take that interest and funnel it up to Columbus to aid in the state legal aid fund. And just, again, it's unethical and illegal for you to use interest from a client trust account for your own personal use. Don't do it, no matter how tempting it is, don't do it. It's not worth your law license. Okay, next we're going to talk about the types of money that goes into a trust account. First, retainers, and I forget who it was. Somebody talked a little bit about the different types of retainers, but the word is used in a couple different ways. A true retainer, the client pays an attorney to be available. It's not a specific case. It's, for the next year, I will pay you $80,000 to be available when I need you, whenever I need you, and you have to forego any other conflicts. That money can go into your operating account because they're paying you not for a specific job, they're paying you to be available. So that's your money. The other type of retainer is really an advance on services. And what that is they're paying you for a specific case. Let's say that there's a divorce or a drug thing or whatever. They're paying you to do work for them, but they're giving you the money beforehand. So as you earn the money, that's when you can put it into your operating account. And we'll talk about moving money out of the operating account in a couple minutes, but you cannot, all of that money that they give you at first goes into the trust account. It's the client's money until you earn that money or until you incur an expense on the client's behalf. So client's money because it's for work that you have not done yet. I have a couple of examples right there, but I see that I'm running out of time, so I'm just going to skip them. They're in your book. So other funds and trusts, settlement funds. You deposit settlement funds in your trust account when the funds are received, and then you wait for the check to clear. Then you divide the funds and you disperse. Make sure that you are perfectly clear with the client exactly where the money is going. If you're getting, 35% and the client's getting whatever percent, and then some's going to expenses and some's going to other stuff, be sure that you account to the client exactly where their money is going. And your portion of it should always be already decided beforehand in a written fee agreement. So be sure that that is in place before you take on a client. And then the next thing I have, checks held until cleared. If your client is going to be paying for something, and it's going to be several weeks in the future after you have the price of it negotiated, you can hold that in the trust account until it's time to pay for that. And you have to wait until the check clears before you write a check to whoever it is that they're paying. Up here, I have the example. Your client, George, wants to buy Nyota Industries. He writes you a check. After all the negotiation happens, you write a check to Nyota Industries for the purchase. Make sure that the check has cleared, because if it hasn't cleared, you're misappropriating, you're mismanaging other clients' funds.
Can I interject?
Yes, you can.
The topic of check clearing, that's another lecture. We can do 30 or 45 minutes on that. Because the check, they can dishonor it, it can come back, they'll grab the money out of it. The bank will grab the money in the trust account, they don't care who it is. It's a counterfeit check. That's the basis for these scams that you read about. Probably y'all get these emails. I got a client in Taiwan or something, and they want to retain you, blah, blah, blah. And some law firms have folded because of that. Some law firms have taken serious losses because of that. And it's basically nuances in federal banking law and Regulation CC on availability of funds. And so the concept of the check clearing, it's really a question of, are there good funds or not? It's not just was the check processed.
Okay.
Sorry.
That's okay. Okay, yes, make sure that the funds are there in the account before you write the check. All right, so, okay, moving money out of trust accounts. If a fee dispute exists, don't move the money. Leave the money in the account until the dispute is over. For example, if you and your client are arguing whether 4 hours was actually necessary, leave it in there until you come to some sort of an agreement. Give them back any other money that they're owed, and you can take any money that's not in dispute, but just leave that particular money in there until the dispute is finalized. You can transfer money from the client account into your operating account only after the fees are earned. I know I've said that at least 5 times now, but I can't say it enough. Do not ever take money until the fees are earned. State in your written services agreement when you can take the funds. For example, some attorneys will have in there that you will take money from their IOLTA, from the trust account, 30 days after the invoice is sent out. If they don't object within 30 days, after that 30-day period, you can take the money. So have in there so that the client knows when you're taking it. And then after you take the money, be sure that you write them a letter saying, I've taken the money. If you want to completely cover yourself, always communicate when you've taken the money. And just keep a copy of any letters or anything else that you've sent to your client. And I just want to say a quick word about flat fees as well. In a flat fee, if you have a flat fee, you're doing something for $2,000, in your services agreement, be sure that that you're going to take $500 when you've reached this point in the case, and another $500 when you've reached this point, and then another $1,000 when you're done with the case, and communicate to the client in writing when that is happening. And it looks like my time is up. Real quick, track, and track well. It's in your materials what you should be tracking. Track for each client, each week, date, the amount of a deposit or withdrawal, the payee, payor, purpose of the transaction, and the balance of their trust account. Be sure that you have that for every single client, and that's all I have time for.
Thanks. That was terrific. Thank you.